Intel has worst day on Wall Street in over 50 years, falls to its lowest price in over a decade. So Intel is basically a household name, and chips are like the hottest manufacturing commodity right now. So Intel losing market share and cutting their workforce in the time that we are now, where chips are like the most important thing to forward AI advancements in technology, is really, really bad. And you can see here are some details. Intel shares plunged the most in 50 years on Friday, reaching a price not seen since 2013 after the chipmaker reported a big earnings miss and announced a massive restructuring. The stock plummeted 26% to $21.48 at the close. It was the second worst day ever for the shares, behind only a 31% drop in July of 1974, which was 3 years after Intel's IPO. The company's market cap is now below $100 billion. The dramatic sell-off continued to 2.4% drop in the NASDAQ and pulled down global semiconductor stocks. Taiwanese Semiconductor Manufacturing Co., known as TSMC, closed 4.6% lower in Taiwan, and Samsung was down more than 4% at the end of the session in South Korea. TSMC is the world's biggest manufacturer of chips, while Samsung is the largest memory semiconductor firm globally. Intel's numbers were bad across the board. And for specifically what was bad across the board, the company swung up to $1.61 billion in net loss after reporting a net income of $1.48 billion in the year-early period. Adjusted earnings per share of 2 cents fell way short of the average analyst estimate of 10 cents. That's 1/5, according to LSEG. Revenue also missed expectations. And here's the kicker. This is the result of all the bad news that Intel put out. Says here, Intel said it won't pay its dividend in the fiscal fourth quarter of 2024 and lowered its forecast for full-year capital expenditures by over 20%. The company said it would lay off more than 15% of its employees as part of a $10 billion cost reduction plan. And whatever you hear about earnings misses or layoffs or anything else having to do with company news, whether good or bad, it's always fun and interesting to check the stock price. And the stock price for Intel, not great on the day. Not really great on 5 days, not really great in the last month, not really great in the last 6 months, not great this year to date, not great in the last year, not great in the last 5 years. In fact, if we go to maximum, we can see that Intel, not only have they had a bad several years where they're down to basically where they were, like the article said, 2013, but they also, and I hadn't noticed this until recently, they've never hit the peak that they were in September of 2000. And probably that has to do with the dot-com bubble exploding, and so they collapsed because presumably they were in the computers and technology and server space at the time. But Intel, if you were to have invested in Intel in the year 2000, you would still be down on your investment 25 years later. So Intel not only missed pricing expectations, but they missed them phenomenally badly. Like you saw, 2 cents return per share as opposed to 10 cents, which was what was expected. And now they're currently in total panic mode, desperately trying to save their stock price. And the huge reason that this is happening is simply AI chips. There's a tech company AI chip and AI technology based gold rush right now. And all of these large chip companies are getting tons and tons of orders. Except for Intel. Intel is not one of them. In fact, you can see this in this Forbes article, which says, has Intel got what it takes to compete in the AI era? And you can see here, it says, now Intel itself is looking to play a bigger role in the AI space with its Gaudia 2 and Gaudia 3 accelerators focused on AI workloads for data centers. The company appears to be focusing on competing price, indicating that the system that includes 8 Gaudia accelerators will sell for about $65,000, roughly a third of the price of similar platforms. However, and this is important, Intel has a lot of catching up to do, as it expects to sell just $500 million worth of its Gaudia AI chips this year, while NVIDIA has been shipping over $20 billion worth of chips each quarter. NVIDIA has also been set to move farther ahead in terms of overall performance with its new H200 chip, which appears to set the benchmark for accelerated computing. NVIDIA has also been looking to lock customers into its AI ecosystem with proprietary programming languages such as CUDA, and this could prove an obstacle for companies like Intel, which are just entering the market. Just now entering the market, even though AI has been big for like the past 2 or 3 years. Intel also has been taking big steps to boost its AI computing portfolio, providing details of new AI chips for PC, codename named Lunar Lake last month, which is expected to start shipping sometime in Q3. Tech companies are some of the biggest companies in the world, and they are spending hundreds of billions of dollars on AI. And Intel is basically getting none of that money. This is a massive ball drop on their part, and honestly, I cannot fathom how they messed this up. Also, if you enjoy this kind of deep dive into the news, I post 2 to 3 times a week, and I'd love a subscription to see you around here on another video. So we've got the big layoffs out of the way, but there's actually a lot of other things that Intel is trying to do to recover investor confidence and bring their profits back up to where they were before, and they released these in this Intel report second quarter 2024 annual results, announcing $10 billion cost reduction plan to increase efficiency and market competitiveness. And it's got this in this summary section here, which is actually down here just a tiny bit. There we go. So reducing operating expenses, reducing capital expenditures, reducing cost of sales, maintaining core investments to execute strategy. And these kind of don't mean anything really. Reducing operating expenses means reducing the amount of money it costs to run the company. So that's the layoff. Reducing capital expenditures, which is reducing the amount of money that they're actually sending out on other stuff having to do with capital, which is also kind of related to the layoffs. Reducing costs of sales, which is how much it costs to actually sell a part. They're reducing how much that is, which I presume also has to do with layoffs. Maintaining core investments to execute strategy. That's just corporate mumbo jumbo. It basically means we're going to try and do what we know how to do even better, so it's more efficient and we can save money on the front end and also make more money on the back end. But it really doesn't mean anything. But I looked over this entire letter, and it basically fails to mention the huge elephant in the room is that tech companies want chips capable of doing large language model computation to build AI technology. And Intel simply isn't providing those chips, and so they're not making money. Everyone kind of knows this, but no one in this letter seems to be acknowledging it. If you are a tech company, you want chips to run AI computations, and if you are Intel, for some reason you're not selling those. But it doesn't say that anywhere. In fact, if I control F and hit AI, we don't really get anything outside of sections like AI in the word sustainably, AI in the word said, and the AI in the word regain, and then it mentions this AI PC product, but it's not talking too much about it, and then it moves on to cost of plan reduction. If I type in artificial, nothing. If I type in intelligence, you only get 1, and it says embedding intelligence into the cloud. There's almost no mention of artificial intelligence or the shortcomings of the company in developing artificial intelligence capable chips to sell to these other tech and social media giants. AI is where the money is, and AI is not where Intel is. Ergo, Intel is no longer making the money, and they had a $1.61 billion loss and have to lay off like 20,000 people. Now, because the world is complicated, it is worth noting here that not absolutely everything that's gone wrong here is Intel's fault. Now, to be sure, most of it is, but there are some things going on that are not Intel's fault directly, and it is worth noting them. The first thing to note is that AMD is actually also down if we look over the last month, the last 6 months, last year to date, and then in the last year as well, they are only up 20%, which is not as much as places like Nvidia are up in the last year, which are up 150%. Relative to where the chip market is going and how much money is being pumped into it, both Intel and AMD are doing poorly, and that's because Nvidia is just gobbling up all the market. It is the hungriest hippo. As you can see here in the last 5 years, basically since 23 to 24, it's gone up like 633% as Nvidia has the best chips to make AI computations. And so that's who's getting all the money. So it's not so much completely that Intel is losing. Rather, a big chunk of this could also be explained by the fact that Nvidia is just winning so hard. Another thing to note is that kind of the whole stock market has taken a bit of a swing both up and down recently. As you can see, year to date, it's got some downs, some ups, and then some pretty significant downs and a little more up. And these reports came out in the midst of kind of a downtrend. So it was always kind of going to look bad because of what the stock market has looked like in the first quarter coming into this most recent one. So there was going to be bad looking results, but these results were especially bad even considering this little dip here that we had before. And you probably remember the thing that like $2.9 trillion worth of assets were wiped off the market cap, and Intel was frankly just caught up in the fact that that day everything was red across the entire board. That's not entirely 100% their fault that the jobs report came out and it looked worse than they expected. But everything else I've mentioned is their fault. And this also probably did not have that much of a negative impact. Most of it came from the fact that they reported their quarterly earnings and they were abysmal. So what happens next? And really, the only answer is that Intel needs to figure out their AI chip manufacturing process. If you make affordable AI chips, then all of these many tech companies that want to buy AI chips will pay out the wazoo for them. They have billions of dollars that they want to spend on these AI chips, and for some reason, Intel has dropped the ball on making them, but they do actually still have a chance to catch up. They just need to start producing really good chips at a really cheap price to try and undercut Nvidia and AMD and try and gain back some of that, both the market share, the profits, and the investor confidence. Now, I do want to end this on not my usual large outlook, but more of a personal opinion. And that is this right here. This is from Intel directly. And it says here, Intel and Biden admin announce up to $8.5 billion in direct funding under the CHIPS Act. Proposed funding coupled with investor tax credits and eligibility for CHIPS Act loans would help advance Intel's American semiconductor manufacturing and technology leadership into the AI era. So Intel is getting $8.5 billion in either government grants or tax cuts, but they are getting the equivalent of $8.5 billion from the government. And I think layoffs, when you're getting this amount of taxpayer money, frankly, should be illegal. It should be illegal for a company to accept money from the government, given to the government by the people of the government, and then lay off the very same people that have paid their taxes in order to give that company the amount of money they got. Intel accepted this money and then fired all the people that this money came from. And I think that's both morally and should be illegally bankrupt. Thanks for watching.